So to start, let's start with my higher time frame, because when we want to enter in a trade, we have to follow the order flow to a higher time frame. This is more reliable, it's more powerful. So few months ago, I used to frame my projection to where the price can be using the 4-hour chart. But since 1.5 months ago, I was digging to the 7-hour chart on electronic trading hours, not the regular trading hours, and I found that the 7-hour chart is much more precise than the 4-hour. And some people ask me, why do you use the 7-hour instead, like the daily or the 4-hour? So the way I see is basically the 7 hours on electronic trading hours, we have 3 candles a day. 6 p.m. to 1 a.m. that basically covers the Asia. 1 a.m. to 8, that basically covers the London session, and 8 a.m. to 3 p.m. that covers most of New York. So you think about AMD, or power of 3, one candle should be the consolidation, the other candle should be the manipulation, and the third candle should be the distribution. So you can frame the whole price action of the day in just 3 candles. You can do this on the 4-hour or 1 hour, but you have to sometimes take more than one candle to get your manipulation, or depending what's in which phase the price is right now. So like here, for example, today we have like a strong dump in London, and what I figured out trading on this 7-hour chart, usually the 6 p.m. candle, if it's a doji candle. What's a doji candle? I got a picture here that would be easy to people understand, and if you guys can see this picture.
Right now, we only see the application for TradingView, so maybe you can just copy and paste the picture and paste it on your chart, and it could still probably work that way.
I'll do that.
I'll calculate.
Yeah, here. Maybe it's easy. Something like this. You guys can see now? So Doji candle, I mean, before I started learning some ICT concepts, I did one retail trader course. So they have this name for this candle, like here, like it's a body with like the same size wick top and wick bottom. So it looks like the price was balanced here. It's not too small, not too big, this body. So we have a wick on the top and a wick on the bottom. This is a doji candle. Usually one breaker has the same shape. So because it is not a breaker, technically one break you must have a high, a higher low, and a higher high. So this sometimes will be the candle that took liquidity. So for example, the last 6 p.m. candle that we have on 7-hour was this candle here. So if I measure the top to the bottom, I get some standard deviations. So we know that the rule is if we close below the 2.5, we trade until 4. So price trade until exactly 2.5, rejected, and we got a reversal. Exactly. I mean, no tick, one more or less to the tick. So when I see this, I would expect, I mean, I didn't short London, but if I would short, my TP would be around here, this one, 2.33 or 2.5. And if we close below, we trade until 4. And to try to frame how long will be this expansion, because this looks like the accumulation, the manipulation, that should be our distribution. But because we have like a holiday yesterday, so the price is not so precise like a regular day. but we can try to just measure the wick of this candle. Let me try to reverse. And we have a projection that price maybe go to 2 or 2.33 standard deviation that matches 22,129, something like this. Maybe we don't get there. I don't know. I mean, we have the PM section, but if I would like target some price would be around here. And to see how this works, let me just take this off. So we can measure the Doji candle, like this one was the last candle low, took the liquidity, and then we have like a bullish leg. So the first leg coming to 1.5, we have a small retrace into a BC, and we keep going higher. So because we close above this 2.5, not today, but maybe tomorrow, by next week, I expect prices around here between this zone, the 3.5 and 4 standard deviation. So prices around 22,340 until 22,475, something like that. But probably I don't know if it tomorrow, because it was a high range week and we have like a holiday. But probably by next week we will have a price around here. And if you see, I mean, look in the past, look here, measure the candle. I mean, here we have the rollover, but the 4 standard deviation is exactly the high of this here. And here the same, here to here. Let me put some zoom. So we have a little between 4 and 4.5 right here. And then measure this candle down, here to here, 2.33, didn't close below the 2.5, we're going up. So if you do this on 7-hour chart, I mean, you can back test, you'll be, I mean, amazed how precise this is. Anyone has some question about this one on the chat? To any asset, to gold, to crude oil, to ES. Let me show my ES chart, because I have a chart here that I mean, to compare assets. So let me get ES, just for example. ES, the last swing, we didn't have a Doji candle here. So let me tell the rule again. If we have some Doji, we measure the Doji from the high to the low. If we don't have the Doji candle, we get the last swing high, the top of the last swing high, until the next candle of the opposite color. So in this case, this green candle, top to the low, we have between. This was a news week, so technically the right thing will be 4 here, rejected. We have to measure this one. And then we didn't close above 2.5, so we're going lower. We need to measure this leg, and now the current one, this one, low to the high, and I expect prices to ES by next week, like in Nasdaq, around this zone, like here. So this one, very sharp. This one, high to the low, 2.5, fail, going up, all like this. I mean, I just have this, the most recent one. Let me see if I have some crude oil. Crude oil is the same stuff. So crude oil, it's here. So let me put so people can see. Top to the low, 2.5 didn't close below, going up, but the final move were here, between 3.5 and 4, here. And then now our current price leg, low to the high, we are, I mean, we just touched 2 and rejected. I mean, if we didn't close above 2, probably we go down something around this zone here. When it touched 2, it didn't close above. you're gonna trade back to between 0 and 1 and move up again. And if we see, we're almost there, probably 69.69, and then reversal again. Let me see some questions. Any questions about this, about how to measure the higher time frame? Like here on crude oil, look, high to the low, 3.5 and 4. Low to the high, 3.5 and 4. It's the same to all assets. But I mean, Nasdaq is very precise because it's the one that I trade daily. So this is basically what I do to frame it. Okay, if we're here, I can expect like long bullish prices. So something around here. Of course, the first zone that I pay attention is always the 2.5 zone, 2.33 and 2.5, because here's more guaranteed, like the price will be trade. But if it goes above it, we need to close above this level. Okay.
So I got a question for you, and maybe I'm gonna help drive the discussion over here. Okay.
Yeah.
So, is there a way you can go to basically like a blank like area on your chart and just draw the fibs out? Just a very blank area. Yeah, perfect.
Let me. So the fib is like here.
Yeah.
Let me put a little bit small.
My question to you, right?
Yeah.
Say you're the market maker right now. Say you're the person that can like drive price.
Yeah.
What do you want to see happen at each stage, and a couple of stage examples?
Yeah.
So like, let's say you have playbook A, you have playbook B, you have playbook C.
Yeah.
Like, what type of playbook do you like to see based off of utilizing your standard deviations?
Yeah.
I believe that'd be a great question for someone to answer.
Good question. This was a topic that I was like studying deep this last month to see how price reacted to each level and try to discover how is this puzzle. Because the way I see how the market moves, I mean, if we think that market's moving with using some kind of algo, so what is algo? It's a computer program. So it's a code. I mean, Tu knows a lot. He's an amazing coder, the same as a Cold Brew, and I was a coder when I was younger. So to a computer program do something, he must follow some order that was inside in his code. So to every order, so every task that this program will run is kind of a logical question. So if A, do 1, else do 2. Some logical question. If you do this, that, else those. So to frame a trade, I have 2 options, because let's see, one thing that you look to the left and see where was the last swing high. So if you measure the last swing high and you see where the price are on this zone. Let's say, I mean, imagine here would be our last swing low. Imagine the price are here. I mean, let me get some. Imagine the price are here right now, and you don't know what's going on the future. You just can measure the past. So if you measure the last swing low and show this fib to you, the first rule, we know that manipulation is always one standard deviation of the expansion. So if you see the price closes above the 1, you are on the right way. So if you close above the 1, that's not a manipulation lag. That will be an expansion lag. But when you touch between 1 and 1.5, you can expect the first retrace before expanding higher, retrace between this zone. I mean, let me more precise. If a little bit above 1, we're gonna retrace around this zone. But to know exactly which zone is, you get a Fibonacci retracement. You go into the price is, but use the regular Fib, something like this. This. So if the price trades around here, it will trade back around this zone, 0618 to 0786, and the gold zone is 0.7705. If the price trades just a little above the one, if it trade a little bit above 1.5 but doesn't close above, the zone that you're looking for prices will be, I'll change the color, between 0 and 1. Let me change this color. Between 0 and 1. So price will trade from the low to here. If we're a little bit above 1, we'll trade back to this zone and go higher until where? Above 1.5. Sometimes it trades until 2. If it rejects until the -2, we'll trade back between 1 and 1.5, and then we'll trade up again to 2.33 and 2.5. If gonna reject and didn't go up, the price reverse. If it just stood here and trade back between 1.5 and 2 and don't go below, or at maximum between the midpoint of 1 and 1.5, we most likely going close above the 2.5 and then trade until 4. But we don't trade straight away until the 4. If you close above the 2.5, we most likely going to 3, reject, get back to 2.5, go to 3.5, reject, get back to 3, and go on to 4, or if not 4, the CE of 3.5 and 4. That's the ups and downs that the price does. And sometimes, it's not often, when touch the CE of the 3.5 and 4, it will trade back to 2.3, 2.33 and 2.5, and then goes up. I can show some examples in the lower time frame.
Hold on. Before we get into the examples, does anybody understand how much sauce that was? Like, it's just like, he just walked you through a bunch of examples. So I really hope people are taking notes on really what just was said, right? So let me ask you a follow-up question to what you see right here, okay? Yeah. So right now, you've identified a bunch of different, I'm going to call them ranges of opportunity, okay?
Yeah.
So based off of where you are in your sequence, or where you deem yourself an opportunity, can you go ahead with a paintbrush and kind of just paint us a couple of examples of what you personally look for?
Yeah.
So if you go to the box, the rectangle, should be over there. Go to the box. It's one drawing above.
Hold on.
Like one, that one.
The brush, this one.
The brush, right?
Yeah.
Yeah.
So you try to make some kind of arrows. I mean, to
kind of like paint us. Like, where are your favorite entries within this sequence?
Yes.
Where are the best opportunities for, let's say, your personality, where someone else may favor looking at one opportunity or another? Because I see that you get a lot in on like the 705, but like there's still a lot of insights on every stage of the opportunity, as you just previously described.
Yes.
So I just want people to understand a little bit about where specific opportunities lie within your framework.
Yeah, I mean, some people ask. Sometimes one guy asked me how I frame my trading entry, because the level of price, I mean, my entry was in a level that didn't have any order block or any fair value gap. To do that kind of entry is a little bit more complicated, because that entry I frame it based on the last swing high. So that entry, it wasn't based on any of these levels, because I entered in that trade before knows how the expansion would be. But how could I know that? Because I will enter that specific trade. Oh, hold on. Imagine we have something like this. Let me change.
So you're utilizing the previous standard deviation
exactly. So I'll show you this.
Create the range extreme.
Yeah.
And then the moment that you find the range extreme, you're looking at a range extreme trade as a reversal at the 3.5 to 4 from the previous swing high.
Yeah.
So that's one of those examples that you look for when they're near like the quote unquote bottom of the price swing.
Yeah.
So
for example,
that's hopefully that's a little bit more clarity. I'm trying to help you out too. If I'm not speaking correctly,
just
let me know.
You're right.
Just want everyone to be able to help out and understand too.
Yeah, for example, so that entry, I mean, imagine we don't know that this Fibo here because we didn't have any price action here, but because the level of confidence I have now, I mean, that been doing this for a while, when price traded, I mean, he was trading lower. When price traded that zone 3.5 and 4, and sometimes price traded 4 to 4.5 is standard deviation, sometimes 3.5 to 4. So I do couple measures on previous swing highs and lows to see that day the price is doing I mean more than one time price trade between 3.5 and 4 and change direction, I mean reverse or retrace. If I see two swing high or lows with that pattern, on the next one, when I see this form, when price touch here, I don't think twice. I enter market order, stop loss tight, because this give me like 5 points stop loss 4, and I don't know if I'm right or wrong yet. So at this time, I don't have any order block, any change in state of delivery, any fair value gap, nothing. It's a risk entry. So it's a try to. Sometimes it goes wrong, so you stop with a short amount of points. But when touch here, price most likely will be consolidated for a couple minutes, maybe 15, 20 minutes, and that is the confirmation I have that I'm right, because if I'm wrong, price didn't consolidate here. He touched here, retraces a little bit, and keeps going lower. So when I started this consolidation here, I mean, most of you guys have noticed this, is what they call the smart money reversal. So price what was coming higher lows, so yeah, a lower low than lower high, and then it started changing the direction here. So we started can see higher highs than higher lows, but very small range because it's a consolidation. And in this block here, we're gonna see change state of delivery or order block or a breaker or whatever. So when doing this, and then when I see the first doji candle or the first sequence candle of the opposite color, then I will plot this fib here, because my trade was open around here and my stop will be tight here and price consolidates. When I can measure this, so I always enter like 3 or 4 counters. Why? Because my first TP will always be the -1. Why? If I'm wrong, that's not a expansion leg, that will be another manipulation leg. Price always will trade until -1. So first TP here. Why? When touch my first TP, I still have another 2 counters left or 3, and I move my stop to break even 3 points above. So if the price goes against me, I took one off. So in this case, it would be, let's say, I don't know, he's much, but let's say 20 points. So 1 minute, 20 points is 400 in profit. I still have 2 minutes for run. My stop will be break even 3 points. If I get stopped, it still be a $460 profit trader. So my loss trader will be a little bit profit. And if I'm right, my second TP will be around 2 and 2.3. My third TP 3.5 and 4. And if I start not with 4 minutes, I left a runner to see where it goes. So if I'm right, I can frame 50, 60, 70 points. If I'm wrong, and if I don't get stopped right away here, my loss trade will be probably 25 points profit, something like this. But let's say that, I mean, you starting doing this now, you don't have like this level of confidence. So when you plot this fib, you have to see where the price is. What I like to see is the price close a little bit above this -1, so it's a confirmation to me that's not a manipulation leg with the expansion. And then I plot this regular fib, and I'll wait price to trace back around this zone. I mean, the 0.705 is a good zone. Sometimes price trades until here. So you have two options, or you have a limit order on one of these levels and you place the stop below this low, or if you wanna try to be more precise and have a smaller stop loss, you wait to see if price will trade here, here, or here, and you enter market. This is a little bit more dangerous because if you didn't place the stop loss before, or you can enter market, you get some slippage. But I mean, it's depends on everyone's personality. I personally myself, I almost always enter on this zone, so it's a market order with a tight stop loss. But if not, I have limit orders. Maybe I split like 2 minutes here and 2 here, and you see if it just touch this first level, when price moves away, I enter another 2 or another 1 using market order. So 2 limit should be 2 and 2. If you just feel like the one level, when price start trading above, I enter the another 1 or 2 counters using the market order. And if the price right away trades, I move my stop line around this zone, because if it trade here and did it go onto this zone, most likely it don't come back. If he trade below this zone after doing this, we are on the wrong side and price will trade below. So I move my stop a little bit up, around a little bit below this 7.786 zone, because if something goes wrong, it probably will be like 6-7 points is stop loss, and it's fine. But sometimes, and if you see the price around this zone here, like between 1.5 and 2, you have 2 options. Or you wait, you be patient and see if the price will reach 4, or you're gonna change direction. Or if you are kind of a scalper, you can go to a second time frame, like 15 seconds, and if price was here, probably he will trade back around this zone. You can like frame in on a 15 seconds a small short, and then trade up again. And to measure every retrace of price, every time you see a swing low, you plot a fib like this. Price most likely will retrace until 705 or 786 before going low. So let's say from the last swing low around this zone to this zone, or the price expanded a little bit below -1.5, trades up a little bit above 2, he's gonna retrace the 0.705 or 0.78 over this zone. Would be something around here. So using the fib gets more easy to see. I can show some example later in the chart. It's easy to visualize.
This is so much sauce.
You still have more. I mean, the gems is still for the next one.
I know, but I want it to also be digestible right now. Yeah. It's like really what we just took through is basically, I just want to help summarize this for some people.
Go ahead,
right?
Please.
So Rafael just took you on a journey of finding the previous manipulation leg and realizing the range extremes of when they occur. And then once the range extremes occur with a certain level of consolidation, and or price reversals where a fractal, concept would happen for him to see his dojis or his extreme, confluence at the 4 to 3.5, and or if it needs to be 4 to 5, right? That's the discretion that you carry, right?
Yeah.
So the one thing that I'm seeing as well is just from a very, very like solidified like price component, then you're looking for basically the next price delimiter at -1 to basically be closed through. And the moment that happens, you're basically taking a dealing range from basically the nearest swing high from that point to find the first stage of reaccumulation in MXM.
Yeah.
And that's going to happen around OTE about 618, 705. And the moment that happens, you're basically layering some orders there because nobody knows basically where the market's going to be retracing from the exact level. And then the moment that you have some sort of additional confirmation from the extremity of the previous price swing and then the -1 on the current price swing, that's when basically the curve is shifted to your understanding. And then you're targeting the previous range stops and trail liquidity aligning with current price leg deviations. So
yeah,
something like that, right?
Yeah, correct. Perfect. Someone have any questions about it? Any doubt? Yeah, I'll do in a live price section to see how it works. Yeah.
I just want to touch on a couple of points here too, based off of the framework here.
Yeah.
We just talked about basically the extremity and then the first stage. Is there any other basis of a framework that we can understand now so that someone, once they see these things on your chart, they're going to understand what your mind is thinking? Because that's the whole point of these, live streams too. So it's like when someone goes and says, hey, listen, Rafael, I don't necessarily understand your chart. You start to refer to them some of these videos to understand the framework so that you don't necessarily have to repeat yourself, because we want to focus on also just contributing to being able to see new insights too, and it just needs to be digestible in a manner that's best for everybody as well.
Yeah. So people that trade the market making models, I mean, we know that have like the first stage of this distribution, or the I forgot the name when we're going down. So we have the first and the second stage. If you try to align the standard deviation to this stages, the first stage will happen around this zone between 0 and 1.5. That will be your first stage of distribution or accumulation. The second stage will be between 2.33 and 3, or sometimes 3.5. And some market makers have the third stage, then when price trades above 3.5 and 4. So 0 to 1.5 your first stage, and your second stage will happen. The price will expand into 2.5 and 3, but the speed, the IC always say, I wanna see speed. The silver bullet zone, it will happen between 1 and 1.5. So the price will trade around this zone, will retrace between 1 and 1.5. When you do this, right after you can see speed between this zone to 3.5, because here will be a little bit slow and then go a little bit up, touch the zone. When we trace between 1 and 1.5, and you see the silver bullet, when you see like the second stage of delivery, and you see speed, and it usually happen on the last 20 minutes of the hour, or the last portion of the 4-hour expansion. But if you trade in intraday, it happens on around the 38 and 41 minutes of the hour, and you have this speed up until the final targets.
Is anyone catching that? Drop a 1 if you're still with us in the chat. I don't know if we want to continue if there's not enough people listening right now. Yeah. Because what's being said right now is
that's James. I try to make things simple, mechanical, because what I learned to from the price action and watching like the good traders doing. To make money on trading, you must trade simple and something mechanical, that it must be right away there. You don't have to think much. You don't have to think in a lot of variables. It must be simple. And when you find some stuff that is simple, mechanical, that happens every day, is that when you can start making money on trading, because it's something that you see that happens always. Then your level of confidence increases and you don't have to think much. So I said, always try to make it conditional things. We are in consolidation, yes. If you know consolidation is manipulation. If you know manipulation, will be expansion. If you can frame which phase of price you are, gets easier to frame a trade, because consolidation price will be choppy. Probably you get is top down or price doesn't move. So in a manipulation phase, I have this hint that you always look for the -1. If it touches here, did it go over? You're wrong. Or you trade the manipulation leg, you close the trade and start looking for pricing lowers. If you go above this, you're right. So probably price will be until here or here. So mechanical. Oh, we are here, fine. So probably we're gonna come here. Come above here, fine. Probably gonna go here. Oh, we stop here. Oh, something wrong. So you're gonna go down. Some mechanical stuff, some logical stuff.
You just definitely put some points that are some sauce there. So let's just do this exercise right here. Can you take a trend line on the basically on the drawing tool?
Yeah.
And then basically just draw a very small like line of the areas of interest where you're saying that you're cautionary once you're in a position, if that makes sense.
Yeah.
Like what you just mentioned before.
Yeah.
I think that's a lot of soft. So I just
want
to be able to see if you can kind of just put that on there and understand it like that for someone else who may not understand the areas, like, because this is what your mind is thinking subconsciously, right? Like once you're in a position, all right, these are the times that I need to be able to just, for lack of a better term, like pay attention because the next move is about to ensue.
Yes. So when you see price closing above the -1, let's see here on this trend. So it most likely shows that you'll be on the right place if you think to trade an expansion, because price could close above 1. Many times you see wicks going over the -1, but bodies close inside the -1. Bodies will close around here. If you see the price action like these bodies here, like reject 1, 2, 3 times, you're wrong. You're not going up. Most likely you will be reversal. So you have 2 options. If you are already long, you close the trade. If you were waiting for a retracing around here, don't frame this trade, because if you put a limit order around this zone, the 0.705 or 0.778, price will trade back and gonna smash you out. And of course, if you have a stop loss here, you'll be is stopped. So the first thing that I wanna see in this price is price close up above the -1, a body, at least one body above. That's fine. And you have some wicks around here. When you see price here on this level, you plot a fib from the low to the high, and wait price trades back to 0.618, 0.705 or 786. Most likely will be the 705 or 786. Few times price can trade it to here. It's more rare, but it can. The safe stop below the low is a
So let me ask you this question, because this is really a tough question too for some people. Okay.
Yeah.
Are you familiar with like a bell curve distribution?
No. What's that?
Okay. Hold on a second. I'm gonna pull up something in the chat real quick.
Sure.
Bell curve distribution. Okay. So basically, what I'm thinking of it here is I want to ask kind of like a tougher question for you. Take that photo I just put on in the chat and then
yeah.
paste it on the trading view chart, and we'll
Yeah.
talk about it.
Hold on, let me copy image. And put
Okay.
a little bit more zoom so people can see. Yeah.
So basically, what I want to talk to you about right here is like, let's say hypothetically, if somebody trades one model, right,
Yeah.
they're gonna just be 100% distributed to one specific entry, right?
Yeah.
So it's like right now, you've showed us a couple different, let's say, like personalities of like your entry based off of your like areas and price of where you like.
Yeah.
If you were to break it down and say, okay, well, let's say this percentage of my trades are in this area, or this percentage of my trades are best in this area, like, do you have any of insights that you can share based off of that?
Yeah.
Because if someone is taking one specific model, then they would never even have this discussion of like a normal, distribution, because it's going to be, okay, this is how my model is every single time.
Yeah.
So it's like right now, let's say you take a first stage or a second stage or a third stage or a fourth stage. So it's like, I believe that there's some topics of conversation over here to have people understand that, like the way that, again, like the risk of, again, this is not financial advice, the risk of the specific stage of each I guess area and price is not truly the same.
Yeah.
And when you're taking an extremity of a price swing, then you want to make sure that even if that is, let's say, a higher, reward to the risk,
Yeah.
that it's still a lower distribution, because if it has a quote unquote lower win rate, then overall you need to be
Not
able to have
worth
a
it.
balance for.
Yeah.
Yeah.
You're not worth it. Yeah.
So this is kind of just I
Yeah.
just want to be able to have like talks a little bit about this, because if you were to maybe just like point to a couple areas on the chart from your personality, again, this is all your personality
Yeah.
and your understanding. This is not anything of financial advice. Nobody's a
Yeah.
financial advisor here. We have risk disclosures inside of our Discord. So I'm just, again, I'm asking the tougher questions here because I know that you're a top tier analyst, and for anybody that is really wanting to just kickstart their 2025 and just understand that they're really just hearing very quality questions and materials delivered, I just want them to be knowing that, if they have further questions too, I'm happy to answer them. But
Yeah.
hopefully I'm putting myself in the mindset of those individuals that are analysts that could be asking these questions and then presenting them.
So first thing that I like to see is the time, because we know is specific times of day and is when we have the big moves. So if you train London, I would try to look some of this swing high or low around after 3:30 and between 3:30 and 4, or after 5 a.m. And then my first entry will depend, let's say when I open a chart and I measure the last swing high, I mean in a Q zone time, let's say is a 4:30 in London, or 5 a.m. in London. If at 5 a.m. I see, let's say the 4-hour candle just drop, like today, for example. Today we have like a bearish move, the 4-hour, the whole 4-hour. So if I start trading, if I sit in front of my charts at 5 a.m. and I see the 4-hour just bearish move, there's no any bullish delivery, I'll look for, measure the swing high and low of London and see where price will be around this zone. If I see this zone, I mean when I drill this and the price is around this 3.5 and 4, I will take a trend around this zone. But let's say when I start to trading, this already happened and I miss it, and the price will be starting going up here. So the best trade I want to be And sometimes if I don't get these levels, I don't trade. I want to enter the trade between this zone, the 705 and 86. That's the best zones. Why? I traded the prop firm's 50K account. So basically I have 2,000 loss limit. So if I want to trade 3 or 4 or sometimes 5 mins with a $2,000 account, my stop cannot be more than 10 points. And to get a 10 points is stop loss, I have to enter around here. If the price is here, I have to wait. Okay, then we come the rules I told. We close above 1. That confirms to me that we going expanding higher. At this time, I could plot this CB, so I know that we're gonna trade until here or here. And another confluence, I get the high and low of the last move, and then I use the sum stuff that will be here, the high and low of the last move, and I will try to match the 705 or 0CV786 retrace will match the 2.5 or something around here. If match, so fine. I most likely trade until here. Then price close above 1. I know that we're gonna retrace. I will wait the price to retrace until here. If the price close above 1 and retrace until 0.5, sometimes it does this, trade 2.5 and trades up. I don't take this trade because my stop loss will be so big, because here to here will be at least 25-35 points is stop loss. So if I see this, I don't take a trade, or I just take one mini because I can afford a bigger stop loss, and then I would try to move my stop loss a little bit more aggressively, because I wasn't sure if it's gonna retrace or keep going up. But if I see price around here and I see all these, yeah, I like to enter 0.786 or 886. That's a good zone for me. And then I take one here and move my stop to break even. I take the second one between here and here, and I wait for a retrace. Sometimes I wait for a retrace around here. I add one, parameter here, sometimes 1 or 2, because if it closes above here and comes back to this zone, that's the speed I want to see. So sometimes I double my position here, and then you get like quick process. If I double my position here, I take one out here, one out here, one here, one here, because I start with 3 or 4, take one out, 2 left, take one out, 1 left, come back here. Sometimes I do another 2 or 3. If I do 3, I have 4. 1, 2, 3, 4. If I have just 3, 1, 2, and the third I'll put somewhere around the 3.5 and 4. So for me, if I'm not on this zone, sometimes I miss a trade. Or if I see the price here and I'm sure the price will retrace around here, and there's a, let's say here to here will be 30 points or 25 points, and the 1.5 is the next level, give me some like 5 or 10 points is stop loss. I check on the 5 second time frame. I enter a short here to here, and then I enter long for this good zone here. But I prefer just wait here, because sometimes you can get choppy here. You must be very precise, because depends the time of day, price moves so fast. So, but if I say which my best zone, I mean, the most profitable trade.
So it's not let me help you out here. It's not necessarily the best profit or all that. I just want now to, because I want to just help you out over here. Can you go to the paintbrush
Yep.
tool again? And like now let's connect. So like you see where it says like on the normal distribution graph, so it says like 13% or 34%, 34%.
Yeah.
Can you basically draw a connection of where your personal distribution is based off of the stages that you're talking about? So it's like, where is like 13% of your trades? Where is 34% of your trades? Like where is maybe 10% of your trades? Anything like that. Then you just circle it like on like the on the chart. Kind of like the tough question that I'm looking to see.
Yeah. So
There's a couple of scenarios you've already like discussed, and I just want to see exactly like where your favorite personality is, because I can kind of already say it, but I don't want to just put the words out there and then you are biased to it, if that makes sense.
Yeah. I mean, most of my trades will be around this zone here. Because if I catch this price lag, if I'm sure of me, if I have like a level of confidence the price will get around, hold on, this one should be, just a second, so people can see what's what happened this.
You're still on the paintbrush right now, probably. Yeah.
So people can visualize. Yeah. Let's get back. So,
do you mind just cleaning up the chart on the bottom? Because I don't want kind of be distracted. I have ADHD, so it's very hard for me to. I just don't want to see the live price on the bottom. If you can help me out real quick, just scrunch up the right.
Yeah, let me just clear this up. So if I see this,
can you zoom back into the price though, so we don't see NASDAQ? Thank you. Appreciate that.
Let me, it will be easy to see. So if I see this price move, this price lag, and I measure few swing high and lows, and the and price, I mean, for more than one time, at least 2 times, he trade to the zone and reverse and retrace or reversal. I mean, and I have this, and I know that 3.5 and 4 price will do that. I keep on looking here. When price, I'll wait to see if price touch 4, because sometimes he touch the CE of the zone, trade a little bit up and trade to 4. So I try to enter on this zone below the CE until 4 of this price lag. And sometimes I enter here and I have a very tight stop loss, and if I have a very tight stop loss, sometimes I got stop with 4 points, and price trades a little bit below this one, like kind of a wick. So I entered the trade here. So I got one small stop, and here
let me ask you this question. So based off of the extremes right here, what percentage of the distribution on the bell curve are we at? So are we saying this is 34%? Are we saying this is like 50%? Like what do we? How much percent of your entries?
Yeah, this would be like 60-70% of my trades would be here. 60 to 70% right here.
Really?
Yeah. I mean, I always take the risk entry. I mean, many traders always wait for a confirmation, the change the state of delivery, or order block. No, I rather take the risk entry with a very tight stop, and sometimes I can get a 1 or 2 small loss. But if I frame this with a 4-point stop, I can eat. I mean, in my mind, for me, it's fine to open like four minutes, because I have like a very tight stop. Because if I wait this confirm this price lag, sometimes, I mean, this zone here to here will be 20 points stop loss. I can open 4 minutes with 20 points stop loss, trading 50K combined. So I rather take 2 small loss and take the risk entry. I mean, the chance to go wrong is bigger, but if I take 2 loss on the third, I get the one good one, my stop loss will be 4 points, and I can frame it sometimes 40, 50 here. So I miss maybe.
So you're really like a very high reward to risk trader.
Yes, I read this, because if I get wrong 3 times here with a very tight stop loss, and I get one nice with a high reward, for me pays, because if I can frame it just one good in the day, it's fine, because it covers like I never take 10 loss in a row, but if I get one good one with a like today, 28, 55 risk reward, it covers like more than 10 loss like this one. So I rather to take a risk. Yeah,
that's absolutely amazing. So let me ask you this question. So now we said around like 60 to 70% are at like the range extremes at like 3.5, 4, 4.5, 5, all that.
Yeah.
And it's like where the other, let's say 30%, how would you categorize that? You divide that up?
Yeah, and the other, let's say the other 30%, there's two zones. One, I wait for a retrace like here around this zone. That's a zone that I like to trade. And then let's say 15% here, so 60 to 70 here, 15 to 20 here, and another 15 to 20 around this zone. No, sorry, I was forgetting. So let's say 60, 15, and 10%. Let me put this one.
Is basically the rest of like the other -1 scalps, or like the pyramid entries for the return for the second stage.
Yeah, will be somewhere around here. Yeah,
makes sense.
Yeah, because this, if I take this trade, is because we already close above the 2.5, and this zone match sometimes with a liquidity here or an order block here. So this trade here should be the ones that I take most, because this one is the trade that I have the most confidence. Because I said sometimes I enter 3, I take it 1. So at this phase I just have like a runner. I put another 3, so I increase my position the same size here, but like in a premium zone. But I know that will touch here or really close, and that worth it, because let's say here to here is another 35 points, 3 minutes with 35 that I say that I will hit for sure. There's a huge reward for me, because sometimes if you take one out here, take one out, sometimes you don't go above the 2.5 and it stop you out right here. This trade sometimes is more profitable than one of two. This one, if you catch the here to here, because I enter size sometimes another 3, and if I have one left, another 3. Sometimes I enter another 4 here, and then my position here will be 5 minutes. And if I can frame it 25 points with 5 minutes, it would be like the 100 points with just 1 minute. For me, that's a very, very good reward, because if I see this price action, it's the second state of delivery. What the guys say, I know that I see speed here, and sometimes I don't have patience. I'm a kind of a scalper, so sometimes this trade here to here, like today, took me 3 hours, and I rather take here to here in 10 minutes and make like 6 or 7% this whole trade that took me like the whole AM section. Sometimes I rather just in and out here. Depends the day. Depends the price action.
So would you just say that you have more confidence at your extremities than you do, like for entry purposes, but the way that you're looking at it from a position management or an analyst standpoint, the moment that you got your 2.5 signature, then that tells you that, okay, well, you're able to start to stack or pyramid your position accordingly. So when you do that, though, are you actually, you know what, I'm gonna say that for another time, honestly, because we gotta the chat's gonna start throwing me under the bus. But yeah, I think this has been like a lot of sauce, and I just want to kind of make it digestible. It's been like an hour right now,
Yeah.
and
we
just pretty
we're
much
just talking about the
you
higher
just pretty
time
much
period.
explained like your whole framework
Yeah.
for a very like high level. So I know that a lot of people now can go back and refer to this video and really just help answer a bunch of questions, because when someone just sees random Fibonacci lines on a chart, they're like, what do I do with this? You know what I mean?
Yes.
So now there's a lot more meaning to that, and I kind of really appreciate that. So
yeah, and then I can show some examples on the lower time frame. That means it's a similar model, but I mean we can see how the price reacts to each level, so you can visualize, because sometimes talking about, I mean, I know because this running in my head, so I can see what I'm saying. But if I was just a people listen, it's not clear to understand if you don't see I mean the bars, the candles. Someone has some doubt about this one? I mean, some questions. I mean, I see some questions, but it was fast. Can I show you a lower time frame? Yeah, I'll show in a while. The indicators use it. Yes, for my higher time frame, the indicators I use are this one. I use the fractal consolidation. So, I mean, it shows me with the settings to auto. So it shows like the overflow, if you are bullish or if you are bearish. I have the power of 3, in this case with the weekly candle, because it's a higher time frame. And I have the OTLC stat map with weekly and monthly levels. This is like for the IPDA, I mean, to see if you are in premium and discount, but on NASDAQ this fail a lot, because we always in premium and keeps going up. I mean, we can use this like a very precise tool, at least on NASDAQ. Maybe when I was trading Forex, I mean, it works a little, but here no. That's a bias indicator for the T trades. It gives like the daily and the weekly bias. I mean, I have like some with confluence, but I'm not relying my trades on this. Like for example, the when here is green, because our our bias will be previous daily high, and if I see this, I don't enter long, because our doll is already, our liquidity is already taken. I just like a confluence for me. And the OTE, I use the 7-hour OTE to see the next candle, if we're going to retrace into EQ zone or the OT zone. Let me see. Let me get back to this one. I can zoom here. It's this. So the OT. So in this case, we can see now, but sometimes the 1 a.m. candle, he trades onto the equilibrium or the OT of the 6 p.m. candle. Sometimes, most of times. So this is the OT indicator that is on this chart, and I use it
basically like an intraday, like one shot, one kill type of area that you're looking for to frame a higher time frame confluence to an existing higher time frame bias from like a mapping or standard deviation.
Let me try to
coupled with any of like the algorithmic
let me see
confluences that you have from data.
Let me see if I can frame like just like using the replay on 1 hour. If the 7 hours show me different levels, and hold on. Yeah, no, he's already. Maybe this is here. Yeah, this is a great example. So look, this candle trade closer to equilibrium was an expectation. When you see replay chart, it's not like very precise, because it shows like the candle after they are already formed. But most likely, when you see this OT zone, if the price touches equilibrium or OTE, it touch here and keep going up most of the times. Let me go to the lower time frame that I can show some examples, so people I guess it's easy to then to see what's going on. So I was talking about the short that happening in London. So this is the London section. I look for the last swing high of price. So here's a consolidation. I mean, it doesn't work for me. So London, I mean, 10 minutes below, before London opening, I have the high and the low, and I have this Fibo plot on my chart. So when I see this, I have two options. First of all, I didn't know if I'm on the right side of the market because I didn't check any previous swing high or low. So I don't know what's happening here. So my bias was bullish today. So this price action, I was looking for any signs of bullishness, and I just see some bearish price. So I didn't take anything. When I see price keep going lower, I was looking to this zone, 3.5 and 4. So when price was around here, I will probably try to frame a trade. So when I see price touch here, he touched one time. I didn't enter long here because it was the first time, and it goes up. When he starts consolidating like this, look, we have like lower low, lower low, lower low, lower low. When price can make more lower lows, look, we make it this low, 21,942, 21,942, and I start to see higher highs, and in this case the fractal consolidation helped me. I would enter something around here. I mean, because when I see the price rejected 2 times here, I'll try to enter my trade around here. Let me try to take this out. I'll try to frame my trades around here. Something around here. If I can enter here, 21,944. My stop would be 94.5. 3.5 is stop loss. So I'll take the risk. The right thing would be put the stop loss below this C zone or below here. But for me, it's a long stop loss. No, this one could be right, but 12 points with 4 means it's a very high is stop loss for me. So I rather to put my stop around here, and if I get is stopped, I try to frame again around here, around this zone, with a very, very tight stop. And I know I didn't 422. No, I didn't take this trade. No. So if I would take this trade, what I do? You reach some zone of my interest. So let me just erase this one. So Doji candle. Doji candle. Doji candle. This case 4.5. 4.5. So if I would take this trade, I mean, if I had this 4-point stop loss, would be fine, because even if a small price lag would be something around, let me see, 35-point stop loss with 4-point stop loss is 7-to-1 risk reward. For me, would be fine. But I didn't take it because the time 4:18. For me, this is not a reversal time in London. So if I want to do a scalp, could work. And then price came up and make another swing high. And then I measure this high to low. And then this was a trade that I take. Why? 4 to 4.5. It's a zone that is, I mean, it's almost the maximum that the price can go. And also match this blue box. It's the 2.5 and 2.33 zone of yesterday opening. And when price moves up,
you are a legend.
When price moves up, that will be the previous. I mean, I can talk about the opening range later, but this zone is a support zone for when price goes up. So when I see this, I mean that zone and this, I enter 5 minutes here. Let's say put like lock position. I enter, I guess it was 5 minutes here with a stop loss. With a stop loss, I entered after this week. I enter here, yeah, here, and I put the stop loss here. It was 3 points stop loss, and then I take the measure of the using the tool, and my final TP will be, I guess I took a 4. Yes, 4. So this 25.5 risk reward with a 3 point is stop loss. So in this case, I have two very strong confluence to me. 4.4 to 4.5 of the second swing low. So London gave me one rally down, one retrace, second rally down, second the third rally down. I guess I see call this three pattern something. I don't know. I know it's like three times go down, retrace, down, retrace. So confluence 1, 3 drives pattern. Confluence 2, 4 to 4.5 of this swing high. Confluence 3, a zone that I know is very powerful on the opening range. Confluence 4, time 4:06. Reversal time to London. It's the second hour of the session. It's like New York. Around 11:30, most likely we're going to see reversal because it's the second hour of the session. So confluences. And this case, I can enter a trade here before knowing how far it goes. Because if I'm very well positioned here, let me zoom in. If I'm very well positioned here with like, today was very sharp, 3 points, but let's say it was 7 points stop loss. For me, if price trades up, and this was like 76 points, if price trades 20, 30 points, there's a base hit to London, 30 points with 7 stop loss, that will be like 5 to 1. So before this order block, was formed, before this BC, before this breaker, before all, I enter here, because if I'm wrong, for me it's okay to lose it 3 points. And then sometimes people ask you why your enter was here, because sometimes I share this image and we don't have this order block or this, but I can forecast that's a zone that most likely will form or order block. And then we can see the price action that I talk about. We go above 1, close above what we expect, the Fibonacci retracement that we talked earlier. So we come here, Fib retracement. In this case, that wasn't be the correct zone because we're going up and down. So the Fib retrace should be about this low, and we have 0.6 on way to the tick. So for the ones that like to wait, like change state of delivery, order block, retest, that's a safe entry because you have the change state of delivery, you have the order block, you have the close above the -1, so confirms that we go higher. And then we have a retracement to a OTE zone. So we could put limit orders here. If you split like I said before, can put 2 here and 2 here. In this case, just the first one will be filled. And I enter if I say 2 counters here and 2 here, limit order, market order, and the stop in this case would be, your stop loss would be not bad, 17 points. And because we saw this fib, you know that you go at least until 39 points. It's 2.1 risk reward. If you go to 64 is 4.1 risk rewards. Now, let me just
so many details and wisdom right here.
Let's talk about the price action.
How long have you been trading again? I feel like I asked you this and I forgot.
What's it again?
How long have you been trading for?
Futures since February. 11 months. Absolutely. Futures. 11 months, yeah.
Absolutely.
I started studying ICT and trading futures. ICT January this year, futures February this year. So 1 year that I study ICT, but I stopped like watching his videos and studying his core content. I stopped in July. So since July, I started digging into different things, because in July I already saw the 2022 mentorship, the core content, the 2023, I was watching the 2024. So there was nothing like new. I mean, it always basically the same things. And then I started to dig into different stuff. So I met the engineer. He showed a lot of source on the regular trading hours gap. And then later I heard Cobru talking about some source that I go into digging. I read the DTT book that, I mean, these guys are genius, and I started to see every candle in a different way, and I started digging to find the model and some source that I discovered like recently.
What a journey. What an absolute journey.
So
unbelievable.
Let me talk about a little bit how price develop inside this these Fibonacci levels. Most of people know this Fibonacci level for one thing. Okay, we get the last manipulation of the price that will give us the expansion. The rule is 2.33 or 2.4. Close above this one, we're going to 4. I guess most of traders know that. But and that was what I was like trading using when I started using this to measure price lag. But as time goes by and I started to digging deep in price action, I started noticing that it's not just these regular numbers. There's some correlation between the day of week, what happens in the past, how this price forms inside, and then I started to digging. So, like I said today, low to high, retracement used to 0.705. You get this, the 705 is the retracement of the first price leg. When you wait close above the -1, your retracement will very rare on the 705. It's most likely to be 0.5% or 0.618, because we already expand a little bit. We were above -1, below 1. Okay, we're gonna retrace a zone that we can have in mind, that if you didn't have time to plot this here because the price was a little bit fast, eyeballing the high that you mark. This high, that the 0 on Fib, will be your support level. Almost always, your 0 is your support level. To the tick. I mean, let me put to make this right. So my 0 is my to the tick support. Look, 1 tick below. This is algo. It is a computer program. So if you write in this code, you're gonna do this. You always gonna do this exactly. So this is why it's so sharp. 1 tick below. So this is a support to me. And then he started consolidating. After this first support, probably have some order block or some breakers to start a small consolidation. Then we trade up above the 1.5. Close above 1.5, we're gonna trade below the 1 and 1.5 zone. If you get a box, you see something like this. Precise. a little bit above the CE, a little bit above. And then price goes close above 2. Here you can stay alert because sometimes, not always, price close above 2 and rejects. He gonna reverse. He not going to 2.33. He not going to 2.4. When this happen, we close above 2. There's a double manipulation than the normal, than the standard case. Because the standard case, the manipulation would be here on -1. Not close above, we going lower. When you see a close, if you see someday close above 2 and price goes against you, of course you probably will be is topped out because it's not normal. That's a double manipulation. We're gonna have a double expansion, probably at -80 expansion for the next price leg. If it happen this, it's not normal. But here was a regular day, close above 2, and we trade back below the 0 and 1 zone, like here. This zone that aligns with this order block probably will be the 50% of this order block here. Order block, no, this is a breaker. 50%, like I said, look, 50%, and then moves up, start consolidating, but this zone starts to be support to price, and then when it closes above the 2.5 here, that's a zone that I like most. If it close above the 2.5, I know for sure we're going here. So close above 2.5, 2.3, 2 and 2.3 for retrace. Look, the body close inside the 2. You have like a wick below, but the body doesn't go below the -2. Never. I mean, it can be, but if it close below this -2, something wrong. Be alert. Trade.
I like stop. That. I like that, Jem. Let me clarify this real quick. So you're saying if you close above the 2.5, yeah, ideally on a lower time frame, you know, based off of what we're seeing right here, you don't want to see a body close back below
the -2.
A half a standard below basically the 2.5. So yeah, that'd be -2.
Negative. Yeah. I mean, most likely price will do this. He will trade back to. I mean, is the same zone I mark like here. This zone. This is a strong support zone after when price trades up. This become a very strong support zone. 2.33. 2.5, but this is 2 and 2.33 because it just closed above the 2.5. When close above 3.5, the 2.33 and 2.5 zone will be the support. I'll show you later in the price section. So this zone becomes support. Price close above 3.5. In this case, goes straight to the -4. So we didn't have, like I said before, sometimes they go here, get back to 2.5, 3.5, 3, and 4. In this case, because it was like a big price lag, was 74 points. You most likely have this, the price do is here in 3 phase, when you have like more than 100 points, 150 points on the price lag. Usually happens in New York because we have like a large expansion. So if I didn't short here, but the way I look to frame a trade, I was long, right? My final TP was here. If I look here and I didn't have a trade, and I see this happen and this happen, I short here right away. I don't wait for order block to be formed. I don't wait for Chinese state of delivery. I enter short here, right above this 4. And I put like 4 points stop loss, something like this. Let me measure here. I would put like maybe, 3.5 points stop loss of 4 here. Market short here, market order to short above this 4. I enter market and 4 or 5 points maximum here, and then I'll see the price will make this, and I was short. I would do this after I'm in. So here I was probably in 20 points profit. And then I will plot my fib and see, and then what's confirming. If the retrace touch here and keep going lower, sometimes I pyramid here because I entered here. I didn't know this price action. I measure, I see where the price can goes, and then if it trades back to 705, sometimes I enter one more here. And but this is wrong. Sorry, this is the Doji candle. So that's the reason I didn't trade this one. Probably see at the time. This is a Doji candle. When you see, okay, perfect to 4. Okay, we're going up again. That price lag is done. And then, of course, this is a very small range. I didn't trade this because this is a kind of a consolidation to me. But if you want to scalp every single price lag, you can measure here to here, you trade here to here, measure here to here, and you can do these ups and downs. So here will be something like this, okay? Something like this. Reject to 2.5, I traded to enter on the 0. 2.5, reject, close the trade, measure to enter short. You do something like this. Measure here, you're short onto 4, boom. Onto 4, you enter long here. Here you're gonna do this, long, right away. In this case, was a manipulation because, no, this is wrong, sorry. That's the price action. That's the Doji candle. Yeah, now it makes sense. 2.5 to the tick. Didn't close above? No, we're going lower. So we measure this Doji here, right away. The thing I told you that this was -2 and we didn't touch the 233 and minus 2.5. We traded until 2 and it wasn't right. It goes back because it's a consolidation. Sometimes it happens. If it's not a manipulation leg or not an expansion leg, we're gonna consolidate and then price goes to 2. Sometimes it goes to 2 on the downside and maybe goes to 2 to the buy side. I'm not sure. In this case, the manipulation. Look, I measure. We didn't close above the -1, so this is a manipulation for a expansion lower. So in this case, if you took a trade here or if you were waiting for a retrace, no, that's wrong. We never closed above the 1. Wicks just touch above, bodies always below. So this doesn't work. And then we got some sauce here. That would be fast.
Are they ready for it? All right, let's just do a little quick checkup right here.
Go ahead.
65 people, 60-ish people. All right, let's just drop a 2 if you've learned something right now, and then drop a 3 after that if you're gonna be ready for what he's gonna be talking about. All right, so let's say people are learning and they're ready. So they're still here. Don't spam. Don't please.
So this I said sometimes again. I mean, I can remember someone said in the chat, Rafael can trade every ups and down, left and right price legs if he meets his criteria. So yeah, if you want to do scalps and trade every single price leg, yeah, you can. I mean, you must be fast because this happened fine. But if you can do, it's okay, and you can like frame. I mean, with very high level of precision. All price legs. So today we have like a high impact news driver, and when we have the high impact news driver, the opening range is not the range that will define high and lows of session. It's the news candle that gonna tell us the high and lows of session. So the news candle is a very, I mean, speed candle. We can measure this because, I mean, it's a very huge wick on 1 minute time frame. But we can, sorry, Josh should teach me this trick.
That's the best trick in the book. I'm so happy. Oh my
God, you saved my life because I was lost times to find it. So if I drop to 1 second chart, I mean, for a human, it's almost impossible to trade one second chart because things happen so fast. So what I can see here, 8:30 candle, 8:30 1 second. What you have here? A rejection block. So that's very important to me. That is the news telling me I try to go lower, but I can't. It's a rejection. So I'll plot my fib here, right here. And then I save this for later. So this case, I can plot this rejection block, or I could trade the correct one. I could like, oh, let me try to frame the first price leg. So I have like these two levels on my chart. So this is the same stuff, but when it was on 1 minute, it gets like that size. But I know that manipulation is +1. So on Fib turns to number 2. So if I'm right and we are bullish, that's the leg that I want to measure, the low and high. That's the manipulation that I can expect the price does. That's -1. Sorry, +1. And then that will be our expansion. So sorry, let me put on this. So we have this rejection block, and we can measure the first price leg. Let me, I just showed this to you guys, so, but this one is the same, that one. Look, the same levels. This one and this one. So if right here, I have two things. So the news drop down, reject. What can I do? I plot a fib from here to here, and then a regular fib, and put this on a different way. Okay, I plot the fib here. Is it right? To here, yeah, to the top, and I look for a retracement on the OT zone, 618, 705, or 786, and you guys tell me where the price touch back. So you can enter long this zone. Stop loss would be I mean, in this case I was below body, but the safe one was below wick. So for me, that would be that would be 166 points, 15.47 risk reward using this stop loss. And but I mean, that's to be safe. When I see this price action, and I know that, I mean, I saw in different news, when I see this and I enter here, I move my stop to here, because the price won't go below the 886, and that would be a 4.5 point stop loss. But okay,
you do that after it goes over the EQ.
Say it again, sorry.
You can do that after it goes over the EQ. Does it like have to form a swing? Does it have to break structure? Is there any other?
Yeah, I mean,
like when you bring up the stop to the OTE entry.
Yeah,
I was wondering, is that a close over the 0.5, or is there a mechanical way that you think about that, or is that discretion?
No, mechanical, because there's a rejection block here, so it shows me that price goes up. To measure the Fibonacci levels using a range, is not the last low to the highest high. You must measure the first price leg, and if it closes above if it retraces onto the 2.5, you move the low to the next low. So for me, the lowest point to measure was this candle to that high, the first retrace, because
yeah, I'm all good with that. Let me just clarify, because maybe I asked my question the wrong way. So it's the moment that you're getting that positive reaction from the first stage of the OTE.
Okay.
What price signatures do you see, or if that's a mechanical
Yeah. So
level basis, I guess.
when price touches the 705 like this, I mean very sharp, he won't trade below. He won't trade below. I mean, this is specific for the news candle. I mean, I could like log the.
Yeah, I'm all good with that.
Yes.
I'm just saying. So based off of that,
Just
now
yes.
once we hit the OTE,
yeah, because I saw like
where would you as like basically feeling comfortable that the OTE is quote unquote confirmed? Does it have to break structure? Does it have to go over the 0.5?
No. For me, I mean, what I saw in this news. After you get a rejection block, I measured the first price leg. I mean, this high until the first retrace. I mean, was this top, and I frame a trade to 618 or 70705. You always this zone. I never saw a news that the OT zone was below this 0705. So when I see this signature, I'm sure that I could use my stop like this, but I mean, don't need it. But here is safe, like, because it never trades to.
Yeah, that's clear. That's very clear now. I understand.
And then
so it's basically all dependent upon the reaction of the 0.618 or the 0.705.
Yes, because if I see, for example, the price trading below, I mean, I wouldn't take the trade because it probably was something wrong, and I try to measure again the levels. I mean, if I see price trading onto here, I see, there's something wrong. Maybe this is not like the other news. But when I see this signature, I mean 705, it's like the other ones. And then comes the nice stuff, because okay, for me that would be the low of the day, because it was the news did the manipulation. If you get back on the 1 minute chart, look at the size of the week. No, sorry. 8:30. Yeah, here, because let me look at the size of this week. It was a 38 points week, and when price did this, he took this liquidity like here, and here. I mean, he trades onto this volume imbalance, I guess. Yes, onto the top of this volume imbalance. That's there's a breaker here, there's a order block. So when I see this morning, for me was the low of the day, and my entry was here. I mean, I entered in London around 5:05. My entry was around here. So when this candle come down, I added two more. I pyramid on 608, because for me was the low of the day. Then price start like running, and I was confident because it didn't trade below here. So okay, we are bullish, I'm fine. Until the 9:30. Here's the second source of the day. So we have the 9:30 open. This is the indicator of the 30 opening range. So what I do here, I just measure the low. I was measured before. The low of the and the high of the opening range. On a regular day, this range will give you, with some tricks that I can talk in another day, not today, the high and low of the regular session, AM and PM session of New York. But because we have a news today, this measure is not so precise. It works, but not so precise. Why? When I see this signature after open, we want to see the price get clear above the opening range or below. If we start closing above, okay, we are bullish. You enter long, and price usually trade to 2.5 or 4 for the opening range. Or if you are bearish, the same thing to the low. I was bullish because the news in my mind was the manipulation. But when I see this signature that I talked before, We never close above the -1. And we are here. And we try 1, 2, 3 times. If we didn't close above, I'm wrong. We go in lower first. I mean, we can go high, but we go in lower first. And I was long. So, but I wasn't sure if we are going lower because the news, I took 2 off and moved my stop loss, and I was, you know, I took my stop around here. So when this happened, I reversed my fib because my buy was wrong, and I reversed my fib, and let's see what happened. Price touch 3.5. Okay, the good zone would be 3.5 and 4. But why I said this is not precise today? Because the news candle that will be the one that tells you the low of the day. So the positive one, that 2 on fib of the leg I measured, it was our low of the day. You could let me put some line here. So yeah, almost there. I mean, the first one is right. The -2 here, the price is 21.8775. The low of the day, where is that? Low of the day, 21.87025. So yeah, the same. 1 tick below. 21.87050, 21.88025. One tick below. Took the liquidity that's supposed resting here from the, I don't know, and that was the long, the high of the day. So I enter long here. I don't know if maybe my trade is still running. Yeah, look. I enter 5 contracts here with 3.75 points is stop loss, because I was sure that would be the low of the day here. So yeah, the price came up. I took like 1 above the opening, and I took 1 -2, 1 -3. So I have like a 1 running up. I mean, probably we don't reach my final TP that's here. Probably not today, maybe tomorrow, but today I said we have holiday yesterday. But on a normal day, yeah, we probably would get here. But even though it was a 197 points trade with a 3 point stop loss, that's my risk reward is a 52.6 risk reward. And probably the high of the session, I don't know if we trade there, probably not, but the high of session will be the 3.54 of that candle. It will be something around here, between 22.78 and 22.009. Probably the middle, 22.085. That will be the high of a PM session before, on the regular trade 3 hour until 4:14. Sometimes price can trade above it, but after 4:14. For the regular 30 hours, low and high is the news candle. In a regular day, the opening price will give the low and high, the same. Any questions?
Putting on the masterclass today.
Yeah, today, I mean, it was a lesson to me because I was so confident here, because I added 2 more here and 1 more in the opening around like here. So I was heavy, and if I don't take 2 when I see that -1 signature, I took 2 off and moved my stop loss like for $300. I was like more than 8,000 profit here, and if I didn't took these 2, my profit would be like $300. And okay, I could enter again, but it would be like very sad to me if I couldn't get this entry, and it was almost 9,000 profit, and I mean having a trade with $300 would be sad.
Big gem there, right there, for anybody that's paying attention. You just talked about the hard stuff. It's not necessarily also saying it's like managing that position is very
No, it's just like
challenging.
what happened. Yeah, I mean, forget about the numbers. It will be the same set if I have one contract and it was like, I don't know, 12 to 2,000 profit and trades back and it stopped me for $100, something like this. It's something that even if you have some level of confidence, you never you never can try to play the market. Market can do whatever he want. So I was confident in a level that, oh, okay, I will hold this trade as maximum as I can because of the manipulation I was doing. So in my mind, there's no way we trading back here, and we trade back. So that's a lesson that I took. I mean, thanks God it was nothing bad, but I could like even have a loss because I try to predict the market when something is not predictable. We most likely can try to find the level, but sometimes it goes south. That's the lesson for me.
So much sauce. I know there's a lot of people in here that were definitely able to learn something today. So
Yeah, I hope.
throw some love in the chat if you guys, can. Rafael took a lot of his time today to be able to share some of these things with you guys, and if you guys appreciated it, I'm sure that he'd be happy to see it as well.
Yeah, great. I think if someone has some question, any doubt, I mean, feel free to ask. But basically, is this we the system to measure is the same on every price lag. I guess at the beginning, what's most difficult is to get familiar how prices develop when you don't see this feature, because sometimes it's easy to watch this chart when you have the all price action printed. Okay, that's a high that I know for sure that's a high, and you measure. But sometimes you see your chart like this, and okay, I can see that high. So what I try to do, if I don't see that, let me erase this to get more clear. Imagine that I just open my chart like this, and I don't know. Okay, here we have like the new. So okay, I'll try to move that. So let's see a little bit before. Let's say like here. Let's say I'll try to start trading like here. So I don't know what's gonna happen for sure. So I try to look at the old swing highs and lows. So I measure this one. So yeah, price trades here. Okay, it could goes up, but the leg up will be just this small range, so that I have this range. So when I measure this, I have two options. Okay, we're going up. That's a nice level to enter because it's supposed to expand here, and I'm in a good zone. Probably I didn't take this trade because for me that's a long stop loss. No, that's fine. It'll be a 90 points. So if I open this chart like this, I just measure. Oh, fine. I have like okay, I'm here. I have like 7-8 points down. For 10 point is stop loss. I enter market right here because it's a retrace zone. So I'll sell market here, put my stop loss here, and TP1, TP2, and between 2 and 2.3, TP3 and TP4. That would be my trade. And then if this happened, and I was, in profit, fine. If when this happened, touch this zone, and I said I have this another zone here with a nice time, I'll enter long here, I'll measure, I'll enter long, and see what happens. And another thing that's like is a kind of trick to see if you're right. When you plot this fib like this, okay, I plot from the low to the high. Your -1 should be a manipulation on the past. So in this zone, you must have like some leg up, and we have like this one exactly. This candle, this is a manipulation candle. So when you see this aligned to -1, is another confluence that I'm on the right side, because if you see on the old ones, on -1 we always have like some manipulation. We have a breaker here. Let me see here. -1 we have
you're still in more sauce now. What's going on over here? Let me take another look.
Another
at what's going
extra
on.
one for the Christmas. For the Christmas.
We're wrapping up soon, and now all of a sudden I just hear it. I hear this sauce. I'm like, wait a second. My brain's like, I need to hear more.
So another confluence to confirm if you're right when you do this measure. Try to see when you measure this price, the -1 level was a manipulation of some leg in the past. So you must find some retrace or some kind of the price goes against the order flow. So we are getting lower prices. On -1 we have this candle, this bullish candle, like 12.5 points retrace. So that was a manipulation for this last price leg. So yeah, it's fine. Like here on -1 I have this breaker. So breaker is something that goes against the order flow. I was going up, I'm going down and keep going up. So this is against the low. This is a manipulation from that leg expansion. So always try to find on this -1 there's something that your manipulation leg. Another thing, every time between 2 and 2.33 to 2.5 you have a breaker or an order block will be formed. Always breaker 2.5, that'll be in the future. I don't work. Come on, let's go. Yeah, I mean that one works too. That's a order block. I mean the price trades up again, but between 2 and 2.33 or 2.5, you have always like a order block or a break or something. Always. You can measure like here, 2.5. Okay, you have a breaker, low, high, lower, low, a breaker, 2.5. Here 2, like this one. Always. So if you see these signatures aligning with your fib, okay, it's fine. In the -1 I have like a manipulation candle, order block or a breaker was formed here. Okay, I'm fine. So small confluence that you can align to your measures. And then another day I can talk about like that's a little more advanced. Sometimes you have like the expansion. First you have the expansion, and your manipulation that should happen in the past will happen in the future. There's some examples that I can show you.
We're gonna have to save some of this, Rafael. We're 2 hours deep right now, and my head is even.
No. Me too. Said this is complex. It's for another day. I'm tired. I'm starving. I need to eat. It's just so we can do another day. I would like to thank you guys for the watching, and yeah, anything you need,
absolutely.
Just thanks Josh again for the support, and then to be here on Christmas. I know you are. I mean, we're all in the holiday time, but thank you so much. I appreciate it.
Yeah, we do it for all the community too. I've missed it too. I can't lie. You know, I want to be able to share some opportunities with everybody over here, and just being able to learn with new vision and new goggles is just always it's very fascinating to me. And you know, before today, I have no harm in saying it's like finding a 10R trade is like something very difficult, but clearly after someone that can sit down today, I don't necessarily say that we can say that we don't have the knowledge, but now I need to get back into the back testing grind and really just get into seeing my own self, because I want to always remind everybody like what they see with one person. It's like you can't just immediately think that you're gonna do what other people do. So that's just a wake up call and a reality check. So
for me, I use the same fib level since I start trading since February, but to get this level, I mean, I would say less 40 days, because for me it was like measure the manipulation lag and fine. So if you guys go deep, study backtest, you're gonna get a better level to how the price works inside these levels. All right, guys, so gonna wrap up here. Thank you so much. I appreciate it. If you guys have any question.
So hopefully this one was recorded, right?
Yeah, that was. I mean, today the video and the audio was recorded. Today's fine.
Awesome, wonderful. So whenever you get a chance, you'll upload that to your YouTube and then send us over the link, and we'll get it shared to the community. We really, 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 really appreciate you, and thank you for spending some time with us today.
Anytime, man.
And everybody else that's in the chat, again, if you don't hear my voice, Happy New Year, Happy Holidays, and enjoy the rest of your week, and hope that everybody else is staying well, okay? All right.
Thanks, man. You too. Bye-bye. Bye, guys.
Bye-bye.